Okay. Sorry, give me a second. I'm going to start with the live session in just a second. Okay, the screen's visible here. Okay. Weird. Sorry. All right, we seem ready to go live now. Hello, everyone, and welcome back to another episode of the Market Outlook series. I'm Kavita, the founder of EXP Invest. So, we are here to talk about what is going on in the market and what does that tell us about what to expect in the month of July 2025. We will also take a look at all the sectoral indices as I had promised, and we will assess where the momentum is headed so we can put our money there. So let's get started with the chart of Nifty. Okay, you should be able to see my screen now. I want to pull out first the indices list. Not this list, the other one. This list, correct. Okay, we'll change this date to June 27. All right. So first we'll assess Nifty. Let's go full screen. Perfect. All right. So Nifty, as we can see, has given a fabulous rally from the resistance that it took at this upward trending channel. It came back, retested the support at 24,500 and then rallied. So here it gave a breakout of this upward trending channel and went and retested its next resistance, which is 25,600. You can see I've set an alert already here at the low price of yesterday's closing. So if that gets triggered, then I will get the alert. But what's next in the market? So above this level of 25,600, we can see market has already approached its almost its all-time high, which is at the level of roughly 26,250. So this, I think, is going to be the next key resistance, or actually I'm going to round this up to 26,300. Okay, I just want to make sure that the correct mic is connected. I forgot to check that. Yeah, it is. Okay. All right. So as I was saying, the next resistance is obviously going to be 26,300 because of the lifetime high. Now, if you look at the daily charts activity here, the daily chart is clearly in the bullish and the rally is now expected to continue since 25,600 has been tested, and this upward trending rectangle has given a breakout on the bullish side. Coming down to the 75-minute time frame, there was this negative divergence developing. But if you look closely, at no point did this negative divergence take a resistance at the level of 60. Even this very last peak that it crossed, there was a breach above the level of 60. Typically, when the momentum is very strong and the prices consolidate, this kind of negative divergence can develop and lead to no negative activity. So if you saw my live sessions in the last entire week, we were following this negative divergence closely, but we were also very clear that the underlying momentum is bullish. We discussed that this upward trending channels breakout is going to decide the next leg of movement. And since it has given a bullish breakout and the RSI continues to remain overbought, our expectation is that the upward momentum is going to continue in the broad market. So that's why we think that 25,600, the next resistance being achieved and breached, we are expecting the market now to rally to 26,300. Now, if you are a member of my short-term plan or my long-term plan, for the short-term plan members, capital has already been allocated 100% in the market right when the market broke out above this level of this key resistance trend line, right? Also, if you're part of my shadow portfolio, then also your capital is already completely invested in the market. So our entire focus is to stay invested in the market before the rally actually begins, right? So that when the rally unfolds, we profit from it, and before it exhausts, we book our profits and we get out of the market. Okay, so this is about Nifty. We've discussed key levels. Now let's start looking at some of the sectors. So first we'll start with the defense sector. So these, you can see these are the sectors which in the last market outlook that was on June 18th, we concluded that these sectors had some potential bullishness brewing. Not potential, sorry. These sectors are clearly bullish is what we had concluded. So let's look at defense and see where it stands. So the defense sector's bullishness remains intact despite of the ceasefire of ongoing wars. Now, my assessment comes on the basis of the RSI's activity. So what I am seeing here is RSI is extremely overbought. There is no major negative divergence. Even the key support level of 20 EMA has not been breached here at all. And I think this is just a rest phase, same way we saw here back in April all the way till the first week of May, or here back in 21st of March all the way till the first week of April, right? Similar kind of a breathing activities happening here, and I expect that the market will continue to rally pretty strongly. Here also, if you see the 20 EMA acted as support, here also 20 EMA acted as support. Here also expect 20 EMA will act as support for the defense sector. So in my portfolio itself, there are 3 stocks which belong to the defense sector. Why? Because I'm extremely overbought on this. Extremely heavyweight on that, right? Now, auto sector. So auto sector, I think, is preparing to give a breakout above this higher high. And the daily time frame has already established bullishness by going overbought back in May. This was the entry opportunity. So we also hold some auto sector stocks in our short-term portfolio right now. And remember, the short-term portfolio and the shadow portfolio are 2 different services, but they have some stocks overlapping sometimes. Because the shadow portfolio, I have more control there. So sometimes when I see fast moving opportunities, like for example, Apar Industries went up almost 20% recently in a few days. So I was able to purchase that in the shadow portfolio because it was a very fast execution necessity. But that is not possible to share in something like the short-term plan. But short-term plan and the shadow portfolio have a lot of commonalities. So members can only sign up for any one of them. But anyways, let's continue. So here the auto sector is quite bullish and expect the bullishness to continue here. So auto sector will continue to maintain in our bullish section. Next is the metal sector. Now the metal sector has established a higher high, but the weekly time frame is giving me a little bit of a concern. Now I have one stock in the metal sector that I've been keeping eyes on, but I think metal sector is going to be a more attractive entry candidate when it takes one dip here. So I am waiting for it to kind of give me a pullback to, by a little bit of, by some points. But I have identified candidates in the metal sector, like Neelco, for instance, where I will be taking entry in the next dip, but not right away. So metal sector, we continue to keep in bullish section. Now, oil and gas, we moved to the bullish section last week, and we can already see strong movement coming here. You see these 2 green candles. This has established a strong breakout above the recent high after oil and gas index broke out above the 20 EMA or took support at the 20 EMA, took support at the previous high level, and I think now it is prepping to continue the rally upward. Notice the strong RSI positive divergence on the daily time frame here. This was an indication of a bottom out. Obviously, it's not possible to catch a bottom, but a breakout above this key level is very important. And now I think the oil and gas is basically ready to give strong rally. On Friday's closing, we saw lots of oil and gas stocks like MGL, like Hind Petro doing pretty well. They gave strong rallies in the market. I expect that trend to continue. Energy sector is also showing very similar activity, so we'll continue to keep energy sector also in the bullish section. What about reality? So I would say reality turned bearish somewhere around here on the 75-minute time frame, and then briefly turned bullish here. But again, so lots of volatility unfolded on the reality sector. All of this, I would say, was pretty bearish. Now it started showing a little bit of bullishness, right? This pullback that it is showing, it seems temporary. So I think reality sector stocks I have not paid much attention to. Now, for the coming weeks, it might be a good idea to look at some potential candidates from this sector. One stock that's always on my mind from this sector is Prestige. So I can see Prestige has shown a negative divergence on the 75-minute time frame, which did indicate this correction that is unfolding right now. The underlying trend on Prestige is extremely bullish. Let's delete this line. I was hoping for a correction back to this level, but it appears to be very, very unlikely that it's going to correct all the way here. So we will actually, let's keep that line. Let's see where we can identify. So this has corrected. On the daily time frame, there is strong bullishness. So I think once it comes back to the 20 EMA or maybe somewhere around this level, this could be potentially a good level for re-entry in Prestige. So that is that. Let's move forward with our sector analysis. Okay, PSU Bank. Okay, PSU Bank is looking quite bullish. It has sustained support at this previous high that was marked on the chart and started to head back higher. It's now above the 20 EMA, and I would expect it to go ahead and establish a fresh high. If you see this trend line, I can see it appears like it is following this channel. Let's delete these lines for the time being. Right, so this is the upward channel, so it has just taken support and is ready to head higher. So PSU Bank also continues to look quite bullish. Now remember, the market is already very close to all-time high. Typically when this happens, lots of sectors will start moving into the bullish category. So ideally for long-term investors, your capital should already be invested in the market. If not, lots of good opportunities are going to come. Now this is the time when the market can easily fool retail traders. Why? Because they get complacent. What does this complacence look like? Thinking that you can work independently without the expert guidance of a retail without the expert guidance of an advisor. The problem is that sure, the market may bait you with some easy profits initially, but when the bear market comes, you will have no idea how to deal with that, because you've not practiced any risk management, you've not practiced proper capital allocation. You don't know about the psychological biases that you will be subjected to, like herd mentality, recency bias, anchoring bias. You don't understand the mental game aspect of the stock market, and as a result of that, you get caught in the market riptide, which are called corrections, and you get caught at the worst possible timing, right? All right, so PSE sector. So the PSE sector is trying to come back out, and we've discussed many times that this is a key resistance. Until and unless it doesn't come back above this, uh, you know, um, it will struggle to show strong momentum. But irrespective of that, the PSE sector as a whole is a super trender, and because it has already clearly shown a dent in the correction that was unfolding and started to move up, I expect that this trend is going to continue upward. Media sector. So now we have come to the potential segment, and media sector is showing some good signals. Zeal is doing pretty well, but I personally don't prefer to invest in the media sector or even trade in the media sector because I find it very volatile for my liking. So I'm going to continue to keep media in potential. Finance. So finance sector, there was a small negative divergence on the daily chart, because of which we had moved it to potential. And you can see it did give some correction to the 20 EMA. I was expecting that maybe it would correct a little bit deeper to the 100 EMA, because there was also this channel that we observed on Nifty. So if Nifty or the broad market would have moved in the other direction, finance would have been a very dangerous place to stay in. That being said, we in the short term plan have also been trading in stocks like Angel One and Manappuram Finance, and we've made pretty handsome profits in those stocks, right? Angel One continues to remain our holding with trailing stop losses. But it looks like that the correction was very short lived, and finance sector is back in the bullish category. Next is consumption. So consumption sector, well, it has potential, but I think there are other sectors offering a lot more attractive investment opportunity. Infra sector has clearly given a strong breakout and is clearly very, very bullish. So infra is where we should definitely uh, seek entry opportunities in the next dip, if not purchased already. Bank Nifty, I can see Bank Nifty is also looking quite bullish. I was expecting, like I said in finance, I was expecting a correction back to the previous high level. That didn't happen. The rally has continued. This negative divergence was a very mild one, and sometimes in strong directional trends, if you see a mild divergence, it can play out without any significant um, impact. That is what we're seeing in the bank Nifty also. So I think that usually bank Nifty, private banking sector, and the finance sector, these three charts track, right? So I would expect bullishness in all these sectors now. What about FMCG? Okay, I think you should not be invested in the FMCG sector right now, because the broad market outlook and the sector specific outlook is quite bullish. So you have no reason to stay in a safe, relatively safer sector like the FMCG right now. Now is the time to go aggressive in the market, I would say. Um, when I say that, I'm sure there are some people who might be confused, because if you look at media, there is a lot of negative news going on about uh, uh, wars and anti-globalization and lots of weird stuff happening around the world. And to us it can seem like very daunting, but when you look at these scary pieces of news, you have to always see it against the context of India, right? Honestly, the economic impact of these things uh, is very minimal. In fact, they make the relative position of India very attractive on the global front. So that is the reason why the Indian stock market is doing so well and is expected to continue to do so well. So whatever piece of news or propaganda, it's like, first of all, whatever you're consuming from, may it be TV, may it be magazines, may it be online websites, I would say 90%, 90 to 95%, in my opinion, of that is propaganda, which means only 5% of that is meaningful. Now, even in the meaningful news, taking it at face value is not enough. You have to take it against the context of, you have to take it against a valid context to make a proper judgment of what that news, what the outcome of that news is going to be. If you don't pay attention to that, then your assessment or analysis of the news itself is flawed. Uh, as a result of which, your decisions coming from that insight is going to be flawed. So that's just my 2 cents about why I think the broad Indian equity market is extremely bullish right now, and why you should be very aggressive in the market. Because I personally I'm very aggressive. I All my clients portfolios that I'm taking care of or giving advice in are also being very aggressive right now, right? So let's move forward with pharma. So pharma and healthcare, I think, are yet to give certain confirmations which would make me personally more comfortable taking positions in them. They are not yet there for pharma. I really want to see a breakout above the level of this one that I have marked 22,200. Unless that happens, I'm going to keep pharma and healthcare both in neutral, right? Consumer durables. So I think consumer durables is turning positive, but for now, I'm going to continue to keep it in durable unless it breaks out above this higher high. IT. I'm sure there's a lot of curiosity about the IT sector. Well, after a very long time, I'm happy to say that the IT sector seems to be turning bullish, right? It has overcome its key EMA supports, key EMA resistances. It's taking good support at the 250 EMA, and the 20 EMA seems to be crossing above both the 100 and the 250 EMA. So I think the IT sector might be coming around. So let's take a look at some of the uh, strong IT stocks. So for example, Tata Elxsi here. Tata Elxsi has established a strong bull trend, has already, let's delete some of these lines. Okay, so this alert I want to keep. I don't think the price is coming back all the way here. In fact, I would like to keep a stop loss here. And I think this might be potentially a good entry now, because if you look at the 75-minute time frame, it was declining, creating lower lows. It stopped creating lower lows here, and it created this little bit of a rally. Now, it is still below the 250 EMA, so maybe we can wait for it to give a breakout above the 250 EMA and buy immediately when it does that, because the 75-minute charts RSI, if you see here, is showing a positive divergence, which is indicative that we can expect rally to return to the stock. And I think the target here can be around 7,600 with a stop loss of around 6,000. If we use the long position tool to assess this, we are basically looking at a risk reward ratio of 3.4, which is quite attractive. Oh, good. So Dixon has been on my watch list since like a long time. We've been trading it a lot, and the trade together, sorry, the short-term portfolio has done pretty well in terms of booking profits. Now, this was a false breakout in Dixon, which happened, and then it declined back to its flag pattern support level, right? Here, I would say, other than this level, it has respected it quite nicely. So once it gives a sustained breakout above the level of 15,000, I think it's going to become attractive again. And I would expect it to kind of recreate this rally. So this is around 36%. So even if I take it, say, from the bottom of this channel up to 36%, I'm looking at a target of around 19,000 on the stock. Like, it's a pretty liberal target, but I think it's achievable. It's also around 0.38% of this entire rally. So I think this looks quite good, but I would want to wait for a breakout above this level. And I would also look at the volume. So the volume activity is already, as you can see, is quite good. It's already bullish, right? It's already quite bullish. Rallies are already being backed by strong volumes. So I think I'm going to move IT in potential because it is really coming around, which means fun trading window is going to start in the market. Okay, so I think we've covered all sectoral indices, and I can see members already have asked some questions, so we'll move forward to that. We have some members with us on Zoom. Let's see if there are any chat messages from them. Right now, I don't see any chat messages. I also don't see any raised hands. So, members, if you have any question, please feel free to ask on the Zoom meeting. And if you also want to, for the members who are not on Zoom and are joining us on YouTube or LinkedIn, if you want to join the sessions, the interactive sessions, it's free. You can join from this link. Join Zoom sessions. Let me just call it Zoom sessions. Right? You can simply visit expinvest.in/join and sign up there. It just helps me keep better track of what queries have been asked and what has been answered as required by SEBI. So I'm going to share this link in the chat with you so you can join it. All right, next, I would like to. Okay, I'm going to start assessing the queries now. So, Parth, I've already covered the Nifty outlook for the next 2 months. I have said that I'm pretty bullish on the market and expecting the market to rally to at least the all-time high now. So, Prashant asked, which sectors will be good in July for maximum returns? Well, I've already answered which sectors look pretty good. What happens if US-India trade deal falls in the next month? What will happen, Prashant, is you have to set your stop losses. You have to manage your risk because there's always going to be possibility of anything going two ways. So you have to have certain basis for making decisions. My basis is technical analysis and macroeconomic study. So you have to understand with respect to macroeconomics and technicals, there's always going to be an element of surprise. You weigh the evidences that are at your disposal and you make an informed decision, and you keep fail safe. Stop losses are your fail safe. So if things go against you, you have to make sure that you're not getting destroyed. There's no major drawdown on your portfolio, right? That is basically how you operate in the market. You cannot expect guarantees in the market. Okay, so Learning Lane has commented that they are holding 60% of the portfolio in defense stocks. I think that's a massive over allocation. It's good to have confidence, but I would suggest you to, you know, diversify. Tarun wants to see my yearly profit and loss. Tarun, well, you are more than welcome to follow an analyst who's comfortable doing that. I think it's my personal data and I'm not comfortable sharing that publicly. You're more than welcome to stop watching my content. BJS Patel wants to know Neelco. Yeah, let's absolutely take a look at Neelco and then we'll take a look at Asian Paints. Okay, so Neelco, let's see. So very strong activity. I think this is where Neelco has gone very, very bullish. Now it has come back to the 20 EMA level, and this was initially this 20 EMA was actually my entry zone, but I can see that there is a previous high level here and also the 250 EMA. So I have a alert, as you can see, set here. I'm going to move this alert lower to Friday's high. So if Neelco creates a higher high here, basically if it goes above the level of 1060, I will immediately go long on Neelco, and if time permits, give it in my short term portfolio as well. But if that doesn't happen and if it continues to decline, then around the level of 950, I think it's definitely very bullish. I'm going to move this alert a little bit higher. 950, I think it's extremely bullish. And I will definitely want to make position here because as we saw on the metal sector index chart, bullishness is definitely coming in the metal sector. It has taken the first step. So I think the pullback that may unfold, right? That may unfold will be a good entry opportunity. So two scenarios, we'll have to kind of wait for Neelco to play it out a little bit better. Let's take a look at Asian paint. Okay, so Asian paint has not been having a very, very good time. When it broke below the 250 EMA. That is when I personally stopped trading in it entirely, and I've been waiting for it to establish itself on a higher high. I think once Asian Paints crosses the level of 2450, it will become very bullish again. There is surely a positive divergence here, but unless it doesn't rally back above this previous high, I am not comfortable touching this stock just yet, right? So it has been in correction for a while. Okay, on the weekly time frame also, it seems to be picking up momentum. Let's take a look at the volume, but the volume is not so strong. So ideally on this rally so far, I would have liked to see better volumes, but the volume is absolutely absent. So I will steer clear of Asian paints for the time being. I hope that helps, Sanidhya. Okay, let's see. We have, please look capital market sector, ma'am. Okay. I don't know if there is a sector which says specifically. I think finance would cover that, and we've already concluded that all finance related sectors are looking pretty bullish. So, persistent systems for short term. Okay, so Dinesh, your question about rollover is pertaining to futures. And I just want to remind all viewers that we don't talk about leverage. We don't trade in leverage out here. And this channel and my services are completely purely pertaining to equity segment, right? So anything that I say here does not relate or advice should not be construed as advice relating to any kind of leverage instrument. All right. So here, what are we seeing in Persistent? So Persistent is a very good IT stock, and as we just discovered, the IT sector seems to be coming out of mucky waters, and it is giving signals of bullishness. Persistent Systems is also doing that. So we noticed that it established a higher high here, and we were waiting for pullback to the previous high. But unfortunately, since this level, we don't really have much of a previous high. I would say this now acts as our previous high level, right? So I think it's very close to giving a pretty good rally here. So I'm going to set an alert here which says pull back to previous high. But whether I'm going to make a position in this or not is not very clear yet, right? Because IT sector is just starting to get bullish. I'm going to proceed with a lot of caution here, but it has potential. So on the daily chart, what I want to do is I'm going to set an alert above this day's open. Okay, and I'm going to call it daily higher high. Typically, I would place this above the high level, but I'm placing it above the last day's open for now. All right. Okay. So Angel One, I am quite bullish on Angel One. I have covered the detailed analysis in the previous video. So I would request you to please go back on my last live session and check it out. So Bhuvaneshwaran is saying cannot join the Zoom meeting. Can you share the link? I have already sent the email to all the registered members on the email ID. Please check it out. Which EMA are you using for technical analysis? So Parth, I'm using three particular EMAs. One is the 20-day EMA, second is the 100-day EMA, third is the 250 EMA. So across all time frames, you will see the same set of EMAs. When I say the same set of EMAs, I mean the exactly same EMAs. Remember, I'm talking about 20-day EMA, 100-day EMA, and 250-day EMA, not period. Which means even if I'm looking at the 75-minute time frame, I'm still looking at the 20-day EMA. So this blue line is my 20-day EMA, the green line is my 100-day EMA, and the dark blue line is my 250-day EMA. Prashant, I do not recommend trading in FNO for retail traders because FNO as an instrument was not devised for retail traders. So the problem with futures is that the leverage over there is too much, and it's very easy to get caught up in over trading over there. Even though the cost may seem very cheap, but leverage can make survival very risky with futures. And the problem with options is that there are so many moving parts that without very advanced systems and models, it's not possible to work with it very diligently. And secondly, the leverage market instruments are so heavily regulated that for retail traders it's very hard to navigate. Like, first of all, it's hard to find opportunities, and second of all, when you do find opportunities, there's a good chance that the instrument will be under ban, right? So I think it's better to just play a safer game and focus on equity segment. Grow slow but grow consistently rather than constantly staying balancing between riptides, like I said earlier, and letting volatility beat surviving the market very hard for you. Okay, so we'll take a look at Trent. So let's take a look at Trent. Trent was very bullish, and it gave a fabulous rally in the past, but then all of a sudden it went into a massive, massive decline. Now, I'm personally am not a very big fan of the way the volume is unfolding here. So I kind of don't want to engage with the stock just yet. Also, the sector that it belongs to is not my top choice right now, Mohit. So I think it might go above 6,200, which is literally like where the stock pretty much stopped declining. But I don't think this is going to be my first pick. All right. Learning Lane is asking which stocks can we keep an eye for in the month of July. So I said stocks from, I think you should focus on the leaders from these sectors. I know this is almost all the sectors that we are looking at. So in auto, keep an eye out on Hero, Bajaj, avoid Tata Motors. Metal, I am definitely looking at Neelco. I am not able to remember any other names. Oil and gas, I'm looking at MGL. I'm looking at energy. So, sorry, I'm really bad at recalling the name of stocks. But stocks that I'm bullish in have already been recommended to my members. So, yeah, that's that. Anyway, so I need to take off. It's time for me. But if you want to connect with me, and if you want to, know more about the live sessions, just join this channel, Trade with Kavita. Look at the number of subscribers. Make sure you're not joining a fake channel. You can go visit to join my Telegram channel. Just visit t.me/trade with Kavita. If you open this on your browser or click this link on your mobile phone, you will automatically be able to join the Telegram channel itself. It's the best way to connect with me. It's the best way to know about my services. So the link to my services, subscription plans, everything time to time is shared on Trade with Kavita channel itself. And also when I'm about to come live, I also put the information out on my Telegram channel, right? And if you want to be interactive with me, if you want to if you want your stock queries to be prioritized, I would request you to please join the Zoom sessions from the link. It's almost free, right? Or okay, everyone, so that's time for us. Thank you so much for joining in the session. Just remember, I come live 2 to 3 times a week, Monday and Friday almost certainly, and I also try to come live on Wednesday to just walk through my process, try to share how I assess my alerts, how I set my alerts, how I use the relative strength quant model, which is, by the way, where I get my stock picks from, all of that stuff. And one small announcement, I will be starting a new batch of my advanced swing trade training program. There will be 24 sessions on Saturday and Sundays only. The last batch was in evening, but this time I'm thinking of doing a morning batch. So the sessions will be somewhere around 11 a.m. to 12:30. So if you are interested in that, then be sure to join the Telegram channel, because I will be posting the information about that in my Telegram channel itself. So with that, we come to the end of today's session. Thank you so much for joining in. I will see you again on Monday after market. Until then, have a great weekend ahead. Namaste.